Hi, I'm Nate Eckman. I'm an analyst here at Value Line. I'm joined today by two other senior analysts, Alan House and Charles Moran. Today, we're going to provide an update on the economy and stock market. We will then recommend one stock to buy right now and, finally, answer any questions you may have. Please note that this presentation will be available on our website, www.valueline.com, and on our YouTube channel within the next 48 hours. All previous webinars are also posted. Before I jump into the heart of the presentation, for those joining us for the first time, I want to provide a brief overview of who we are at Value Line. We are a New York headquartered corporation that has been providing investment research for more than 90 years. Our flagship product is the Value Line Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on equities that trade on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. One thing I want to stress is that our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including all the equities under our coverage. Value Line does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. If you have any questions about the products or services we offer or our different tiers of subscriptions, that information can be found at valueline.com, or you can call 1-800-VALUE-LINE. Now, let's discuss the economy and the stock market. This content was prepared by Value Line's economic staff. The nation created an estimated 150,000 jobs in October. That figure fell short of the consensus expectation of 170,000 and was accompanied by downward revisions to the tallies for the previous 2 months. The unemployment rate also inched up to 3.9% last month, suggesting some weakening in the labor market. Of particular importance to the Federal Reserve in its attempts to tame inflation was a moderation in the average hourly wage growth over the last 12 months to 4.1%. This marked the smallest increase in more than 2 years. The Federal Reserve kept the federal funds rate in the range of 5.25 to 5.5% at its November monetary policy meeting. The decision was not unexpected, as the central bank believes it has not yet seen the full effects of the most restrictive monetary policy course in 4 decades. Fed Chairman Jerome Powell said there still is a bias among policymakers to hike interest rates, but did not sound excited about the possibility. Third quarter earnings season is nearing the finish line. In total, more than 80% of the reporting S&P 500 companies have surpassed earnings forecasts, with average profit growth hovering around 4%. This would mark the first period of year-over-year earnings growth since the third quarter of 2022. Fourth quarter company prognostications have been underwhelming, but not enough to raise red flags about the overall health of corporate America. These recent events have created a Goldilocks scenario for Wall Street. In general, the Federal Reserve is starting to see some meaningful progress in its attempts to slow growth and the pace of price increases, but not at the cost of pushing the economy off a cliff. That said, the month of October brought declines in manufacturing and housing market activity, which may be why Chairman Powell noted that the central bank will remain data-driven and proceed carefully with regard to tightening the monetary reins further. In conclusion, the market now seems to think that the central bank is done raising interest rates and long-term Treasury market yields eased from their recent peak. This prompted a notable rally in an equity market that was in the midst of a multi-month decline that commenced in late July. Please refer to the inside back cover of Selection and Opinion in the Value Line Investment Survey for our statistically based asset allocation model's current reading. On that note, Value Line provides a great deal of information and analysis to help our subscribers. We know that most of our users depend on our weekly stock reports, time-tested ranking systems, and other valuable services. In addition, Value Line offers a great deal of daily content that can help you avoid the pitfalls and profit during this volatile time in the stock market. Every business day, senior members of Value Line's research department review the most actively traded stocks, company press releases, news stories, trade periodicals, and other sources for data and information that may change our view and investment recommendations for specific stocks. When something noteworthy crosses our desks, we immediately publish a supplementary report that outlines the new information and, importantly, what it means for the stock and shareholders. This content is posted throughout the day on our website, which once again is www.valueline.com. I will now show you how to access those reports. Once signed in on the website, head to the dashboard where I am already located. This is the main landing page for subscribers. Under Quick Links, click on Supplementary Reports. As you can see, the research department has been busy publishing our updated reports on the stocks that we track. We strongly suggest that subscribers visit this page often. Some individual companies incurred a lot of debt or sold stock to improve liquidity over the last few years, especially those dealing with sharply reduced demand for their offerings and supply chain problems, among many other issues. Due to the changing structure of company balance sheets, Value Line has been reviewing and altering our primary financial strength grades for the stocks in our coverage universe. These changes are posted each week in our Selection and Opinion newsletter. For those of you that don't know, financial strength, along with price stability, another proprietary Value Line measure, are the two metrics that are used to calculate a stock's safety rank, which is a key measure of risk. When considering a new stock to invest in, we strongly suggest that you utilize financial strength and safety in your decision-making process. For more information in regard to our proprietary ranks and ratings, Value Line provides a user guide that can be accessed via the investment education section of our website. Lastly, this is a good time to mention that the case for individual stocks is quite strong over broad index funds. It looks like we're having some technical issues with our presentation. I'll just give that a moment, and it looks like we're back. So with that, we are going to move on to our one stock to buy right now, for which we are going to go to the screener. Let's just take a moment to get there. To get there, you will go to the Browse Research tab on the website, and then there is a link to the screener from there. All right, we're in the screener. Value Line subscribers have access to 15 preset screens and 50 fields for screening stocks. I should also mention that another 100 or so fields are available, requiring a higher level of subscription. If that interests you, please call 1-800-VALUE-LINE. So, as noted in our economic analysis, although there are some positive indications looking ahead to 2024, much also remains uncertain. As such, we'll be looking for stocks with a better than average risk profile and strong returns potential over the long term. We'll start the screening process by looking at the safety rank in the ratings and ranks section. There are many risk measures to consider, but today we're going to start by applying our time-tested safety rank. Safety measures the total risk of a stock and is arranged on an easy-to-understand scale from 1 to 5, with 1 being the most conservative issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. They also meaningfully participate in up markets. For more information, I encourage you to peruse our ranking system guide, which is available free of charge from within the investment education section of our website. We're going to focus today on stocks with a safety rank of 2 or better. By applying that first criteria, we've trimmed away our potential candidates down from 5,700 to 396 candidates. Next, we're going to filter for timeliness, another of our tried and true measures. Timeliness is a proprietary value line metric that evaluates a stock's projected price performance in the coming 6 to 12 months. Like safety, it's a straightforward scale from 1 to 5, with 1 being the highest. Today, we want a stock that will keep pace with the overall market over the short term, so we're looking at stocks ranked 3 or better. And by applying that screen, we have trimmed our list down to 235 candidates. Now, today, we would like to find some stocks that may currently be undervalued. To do that, we're going to focus on stocks that are trading no more than 15% above their 52-week low prices. Alan, I think you're going to want the percent change in price from 52-week low, not the 52-week low there. Give us just a moment here. As you can see, you can adjust the screen as you're doing it, adding and removing criteria as you see fit in order to refine your search. And so now we will apply the screen of no more than 15%. And there, with that applied, we see that we have reduced our opportunity set to 97 stocks. Of course, stocks trading near their lows aren't worth anything unless they do eventually go up. Thus, for our next criteria, we're going to look at price appreciation potential over the intermediate term. Today, we'll be looking at stocks with appreciation potential of at least 25% to the midpoint of their 18-month target price ranges. For comparison, the median appreciation over that span for all stocks in the value line universe is 20%. By applying this criteria, we have cut the list down to 36 candidates. Finally, we want a stock with strong potential returns over the long term. This figure is derived from analyst projections of cash flows, earnings, and terminal valuation over the next 3 to 5 years. For today's selection, we would like to have an annual potential return of 25% or better. And with that, our list is down to just 4 possibilities. You can make a strong argument for any of our remaining candidates, and investors interested in adding new positions should consider them. However, only one can be today's one stock to buy right now, and after consulting with a number of our senior analysts, we prefer and recommend Baxter International, ticker symbol BAX. Before I click on Baxter, please note that screens can be saved and revisited by utilizing the Create Saved Screen button at the top. Now, let's take, and see there's the Create Saved Screen button right there. Now, let's take a look at our most recent full-page report for Baxter International. To access it, we are going to navigate to Baxter's webpage, then down at the bottom, and we can see the reports dated for us there. November 10th is our most recent report. Baxter International is a provider of healthcare products and solutions, particularly medical devices. As you can see in the statistical array, which is the area in the center of the report that includes the financial data, earnings and cash flow are expected to be down this year, even as other key metrics, such as revenue, have continued to steadily improve. The stock has taken a beating in recent months and is down approximately 30% year to date. The most recent sell-off was precipitated by concerns that new weight loss treatments could have a negative impact on demand for Baxter's products. However, as our analyst notes, this seems to have been an overcorrection, leaving the stock undervalued. The company's financials are solid with a financial strength rating of A. This, along with its perfect score for price stability, are reflected in its above-average safety rank and make it an appealing prospect as we consider market conditions in 2024. Meanwhile, intermediate to long-term recovery potential is wide. We would particularly like to highlight the issue's annual return potential over the 3 to 5 year poll, which is projected to fall between 28% and 36% at the current quotation. Overall, we think that Baxter is likely to hold up well in 2024 with exceptional appreciation potential over the long term. It is today's one stock to buy right now. We will now tackle your questions. Please note, I typically can't answer complex questions about specific stocks on the spot. For that sort of thing, I recommend a review of our latest reports. The first few questions were submitted prior to this presentation. Now, I'll hand it off to Alan to take our first question. Take it away, Alan.
Okay, thank you, Nathaniel, for that presentation. We had a couple of questions come in prior, to our presentation that were very good. Somebody asked about the capital structure box and about the long-term debt. Is it long-term debt or total debt that's used to calculate the percentage of total capital? And that is, in fact, long-term debt that we use to calculate the percentage of total capital. So if you see on Baxter's report here, the long-term debt to total capital ratio is about 72%. So we use long-term debt to total capital being long-term debt plus shareholders' equity. So basically the equation is long-term debt divided by long-term debt plus shareholders' equity. There was also another question posted prior about the cash flow line. And yes, it is a proprietary value line measure. We do try to match it, use a multiple so that it closely mimics the price movements of the equity. And as you can see with Baxter International, the cash flow line is actually currently over the price. And as Nathaniel alluded to, the share price has gotten hit pretty hard of late, which has brought it below the cash flow line, which sometimes is called the value line. So, and many people may see that as a good buying opportunity, given that valuation metric. Thank you. I see another question. I'm sorry, Nathaniel?
Oh, no, if you got another question, take it.
Oh, yeah, I saw another question that just came in alluding to the 18-month target price range. And, people that have subscribed to Value Line for many years probably remember we used to have we still do, we had the timeliness rank and the 3 to 5 year projections, which in this case is 2026 to 2028. About 5 or 6 years ago, Value Line introduced the 18-month target price range because there are some investors that are looking for an intermediate term. Timeliness rank is generally for the next 6 to 12 months, whereas obviously the 2026, 28 is for long-term investors. So there are investors that are interested in, maybe holding on for 18 months or so, and then, or just seeing, what the gains potential is for that period. So that's why we introduced that.
Mm-hmm.
Thanks.
I see a question very reasonably asking, how did Baxter International make our screen when the timeliness rank printed right there on the page is very clearly 4 when our cutoff was 3? And the answer to that is that timeliness ranks, like other data on our website, are actually updated between printed reports. So this printed report has, a publication date of November 10th. And since that was published, the timeliness rank for Baxter International has actually been revised upwards to 3 based on, more recent data. So our screen, because that relies on the website data, used the most recent information, whereas this page, even though it is only a week old, the timeliness rank is already slightly out of date.
Thank you, Nathaniel. And yes, just to piggyback off that, we do update our data and our, that's used to calculate the ranks, on very regularly. So that's why, as Nathaniel alluded to, the time of this rank has moved up a notch since the time of this writing. So it is something that we keep a close watch on, even when it's not earnings season, because obviously things like price movements, maybe pre-announcements, things like that can definitely affect, the ranking of the stock.
Mm-hmm.
Thank you.
We have somebody asking to see the screen criteria again. I can repeat those, or Alan, if you can maybe take us back there. But the screen criteria, for anyone who wants them, were safety rank 2 or better, timeliness rank 3 or better, change in price from 52-week low price, 15% or less, appreciation potential to the 18-month target price range midpoint of 25% or better, and 3 to 5 year high total return potential of 25% or better.
Okay, thank you, Nathaniel. And also with the screener, as Nate was going through it, there's many different factors you can use for the screen. As you can see, we use just 5. You can play around with any number of these based on your investment criterion, and these factors do update. If you have put these factors in, say, on a Monday, by the next day, even some of the stock selections could change based on the factors you put in even yesterday, because as everyone knows, stock prices move, and 18-month potential could change, or ranks can change and things like that. So it's as Nathaniel alluded to before, you can save these screens and kind of check back on them at any point in time, create new screens and what have you. So it's a very dynamic application.
Mm-hmm.
Thank you.
Mm-hmm. We have someone asking, in our professional opinion, once a stock is selected for purchase, how often should you monitor it, and what metrics should you use for determining it's time to sell? And the answer to that is somewhat unhelpfully, it depends, because that's a strategic decision. It's going to depend a lot on the specifics of the stock and what your investment goals are, what you should be doing there. Like if I'm buying, a riskier short-term play, I'm obviously going to be checking in on that much more regularly than I am on a very stable value issue that I've bought with an eye towards long-term appreciation. And that's just, that's the nature of investing, is you need to have clarity about your own strategic goals and base your decisions on that.
Okay, thank you, Nathaniel. Just see if there's any other questions that came in. That's all the questions that I see for now. Nathaniel, do you see anything?
I'm not seeing anything else that we can address today.
Okay, thank you for joining us.